much. Mining company Petmin has reported a 19% drop in full-year earnings. I suppose it depends on how you want to look at those earnings, though. Ian Cockrell, Executive Chairman's with us. If you take everything into account, Ian, you went from 19.5 profit earnings per share last year to 19.5 loss earnings per share this year. It hasn't been the best 12 months.
I think, Alec, it depends, as you say, upon the way you look at it. If you take out the impairment for Veramo, we made 15.25 cents. And on a like-for-like basis, last year we made 13 cents per share, because obviously in the figures you've quoted, you've included Samquartz.
But that's, I mean, 200 million rand write-off, or impairment as you call it, on the Veramo project. You did announce it in a trading update, but at the time we didn't talk. You can perhaps explain to us what went wrong there.
Well, I don't think there's anything wrong. It's just the nature of the global commodity market at the moment. Every year we're obliged to review all of our projects. We look at the value, our future projections of the price line for the commodity. We look at mining costs, all the associated inputs, and we value that project. And we felt that it was prudent this year to reduce the overall value of the project by 200 million rand.
Did you get caught up in the hype? That's what most people look at the mining sector and say there was far too much expansion, there was too much excitement. It was almost as though there was never an end to the China demand story. Because 200 million is a lot for a company that's only valued at 1.2 billion.
Yeah, look, it's a lot of money, but it's a paper figure. It's not a cash figure. I think that needs to be stated right up front. Were we caught up in the hype? No, because again, every year you're obliged to value it as the market sees things at that time. So it was a high watermark valuation, and this year it's come down. Next year it may go up if the price for iron ore improves.
It's the way that the commodity cycle goes, I guess.
It's a cyclical business, Alec.
It looks better at Somkhele, but you've got a strike going on there at the moment. Yes,
look, it's that time of year. Wage demands are in. There is a legal strike. We're sitting with fairly extensive stockpiles. We're supplying customers from those stockpiles, finished product stockpile. So, and for a while we were continuing to produce on the mine and work the plants with volunteers. That is not the case as we stand at the moment, but we're hopeful that we'll get resolution fairly soon. I think we're very close to getting a resolution.
Is it AMCU?
We have about half the workforce is AMCU and half the workforce is NUM.
And are they both unions off?
Both unions are on strike.
All right, so there's no brighter side to the union fight for yourselves, but you have paid a dividend of 3 cents this year, down from 5 cents last year. Why, Ian, when you had all these write-offs?
Well, we have a very strict policy, and our policy says that we will pay out 20% of headline earnings per share. Our headline earnings per share, as I said earlier, was actually up, like for like. And so we felt it was still prudent to pay a dividend. It's in line with our policy of saying shareholders would like some money today, as well as the prospects of longer term growth. So
next year better?
I think the outlook, particularly for the anthracite market, doesn't look good. It's anthracite, metallurgical coal, even thermal coal is fairly soft. We're hopeful things might turn, but at this stage I wouldn't be banking the farm that it's going to get significantly better.
Ian Cockrell, thank you for coming into the studio today. He is the Executive Chairman of Petmin.